Good evening, everyone. Thanks so much for giving me your time. We had a few problems with GoToWebinar, and I had to log out and log back in, but we're ready to go. This is Mark from Right Line Trading. What I'm going to be presenting to you this evening is our optimized Forex suite. And frankly, I think you're going to be very impressed because it's going to really give you amazing entries. Now, you know the process that we go through. It's a mathematical optimization process where we really look to determine all the independent variables that determine the future movement of price, make it all very easy to see on the chart, and get your really great entries. And this is the first time we've really had the entire suite optimized. And really what I want to do is I want to go over it with you almost like it's a didactic session. Teach you about the inputs, how to trade it, show you what you look for signals, and where you would take a long trade, when you would stand aside. Because I know that there are a lot of traders in the room who have the system and would like some additional information on how to trade it. They just recently purchased it, and I really haven't done a comprehensive webinar to go over it. So I'd like to do all that. Plus, this indicator right here, I'm gonna talk quite a bit about it, is brand new. We just created, this is a unique oscillator. It's sort of an amalgam hybrid oscillator that we still are not done with. So I'm going to show you the trade entries, but I'm going to show you where it would signal you to take a trade. Now, when this indicator is done, it's going to signal these for you. So it's going to be a really simple process to take a trade. Now, if this is the first time you've ever seen this platform, let me go over each of the different indicators for you one at a time. And what I thought I would do is go over them with you sort of from least important to most important. Now, the first thing I just want to do is just make this 50 thicker, just to make it a little bit easier to see. Okay, now, I'm really going to, for some people, for some traders, this is going to be a little bit redundant, but I think all of it is worth talking about. Now, this is our 50, and this is our 15. Now, you know this is a Renko system. Now, we call it a hybrid Renko system because if we go to the right edge, unfortunately, the market's trading very, very bad volume right now. It shows the wicks inside the candle bodies, but we need to show live data for that. And there's just one other indicator I want to add that I didn't to complete the, and it's right off the Forex suite. One second here. Here it is. Okay, there we go. Now, it may not color because the market's dead, but I still want to display it. So right here, we have the 50 and the 15. Now, the 50 has to be optimized. And what we do is we optimize each of these parameters individually. The 50 is a 50 EMA of a 50 EMA. So what we did was we took the equation and we duplicated it so that it moves quickly. But if you overlay this with a simple 50 EMA, you'll see that the 50 EMA is very choppy, whereas our 50 EMA is very smooth. Now, this is a 15 EMA of a 15 EMA. And this has the speed of a 15 EMA, but the stability of an SMA. And I'll show you just by quickly overlaying an EMA. That's set to 15. And you can see how price pushes it down and kind of pushes it around. And in places where price gets choppy, you can see it starts to get choppy too, where our moving average is much smoother and tends to have less of a reaction. Like on this move down, it's much more smoother on the move down. So it provides you with a lot of stability. And here, this gets shoved up. Our EMA stays smooth and flat to give you a much better momentum assessment than the EMA does. So it's a better moving average. I'm going to take it out. Let me go back to my writing. Now, from there, let me just, I think it's important to do what background bias is, because it's sort of the linchpin of our platform. And I just want to make sure that we've got this set up correctly. Now, this is called bias, and it's the background color. And the background color is probably, in my opinion, the most important independent variable that determines the future movement of price on the chart. And you can see that when the background bias is green, price rises, almost always. Now, on most software platforms, all the background is doing is a moving average or some very simple calculation so that when price goes up, it turns green. It's basically telling you already what you know, and that is price is going up. What this green color is generated by are the two higher time frame Renko charts. Now, this is a 2 Renko, which is what we trade the pound dollar on. And so what this is looking at is the 4 Renko and the 6 Renko. Those are bigger candles and slower charts. And when we get an alignment on those higher time frames where the 50 is up and the 15 is up and the 15 is crossed the 50 to the upside, we get this green background. Now, if the two higher time frames have this configuration, almost always price on your trading chart is going to rise. That's why this color is so critical and is able to predict the future movement of price. Price on your trading chart is simply going to follow the direction of a multi-time frame alignment of your two higher time frames. And this is a great opportunity to trade long. Now, this is also a long color, but it's not as strong. And I'm not going to go into that much detail as to why this is a weaker up color than this, or this is an intermediate up color to this, except to say, here's your strongest, here's your second strongest. And although this is absolute long trade, this is the weakest and where you can experience chop. So you have to be careful here. So all we're looking at here, and for the downside, I think I'm going to have to load a few more days here. I only have 3 days loaded. Why don't I load 10? Now, let me find some downside color here. Right here. I mean, when you get this dark pink, I'm not going to tell you it's 100%, but you're almost always going to have price follow in the direction of the 2 higher time frames. And when the 2 higher time frames are rocking down, so is price on your chart. So it sets for you an absolute direction. It also defines areas where you just should not trade. Let me find a nice area that's clear, where there is no directional bias. And right now, this is a great trending market. And this is one of the markets I really like to trade. And I'll show you any Forex market that you like. And you can see it's really hard to find an area where we don't get background color. Now, here's a good example. Right here. It's as important to define areas that you should trade as it is to define areas that you shouldn't trade, where the likelihood of getting a winning trade are very small. And when you don't have a multi-time frame alignment in trend on your higher time frames, your chart or price on your chart is almost always just going to chop. So you stay away from anything that evolves during this period of time. So anyone trading in here is most likely just going to get stopped out. You wait for the time frames to align, and then you have an absolute direction to trade. And look, I mean, look at these moves down. I mean, these are the kind of moves you get when you get that multi-time frame alignment. Just big moves. And you just stay away during periods where you don't have anything. So the way I look at it is this is sort of like, excuse me, the activator. Without this multi-time frame alignment, I don't want to trade. I don't care what I get during this clear period. Any kind of trade that you take is going to be associated with increased risk. And I think one of the things that a lot of day traders and swing traders don't understand or don't think of and make crystal clear to themselves is it's the most important thing in trading is not getting winners, it's avoiding losers. That's really the key. Even on my worst days, I get lots of winners. What happens to me on my bad days is I pull in losers. So it's important for the software to define for you when you should stay out of the market. And that's what this does. The only purpose of a software program is to give you an ability to define the risk associated with your entry. And that's what we work really hard to do. Now, the other indicator that's very, very important is this line. Now, this is called our quant line. Each Forex market has a different quant line. We have to optimize that line individually by market. Like, this isn't a one size. Usually, if you get a Forex software program, it's just one program and you can use it for any Forex market. And that's because it isn't optimized for each individual market. And that puts you at a distinct disadvantage. And that's why we really go through a lot of work to create the program. You see, each of these quant lines is individually optimized for each of these different Forex pairs. And if you put the wrong line in your platform, it's not going to work. Because what this is there are certain Forex pairs that rise when the pound dollar rises. And there's certain Forex pairs that fall when the pound dollar rises. Because really what's going on in the Forex markets when certain markets rise and certain markets fall is institutional money making a rotation from one pair to the other or from one market to the other based on risk. And what these are correlative markets. So not only does the program do an assessment of multiple time frames, it does an assessment of multiple markets on multiple time frames. Because what we're doing is we're making an assessment of money flow. Now, right here, the markets that should go down when the dollar pound goes down are going down. And the markets that go up, when the pound dollar should go, and markets that should go up when the pound dollar should go down are going up. So we are tracking the flow of money. We know it's coming out of its directly correlative and going into the markets that correlate in the inverse direction. You can see for a short period of time here, even though price continued to just blast down, the correlative markets had a brief blip right here. So it shows you that this is not looking at price on your trading chart at all. If it did, it would never go yellow in the middle of this really screechingly hard move to the downside. But the three correlative markets that are in this line had a little bit of a blip. So we always want to trade in the direction of money flow, because when you get this, it means that there's institutional participation, and the probability of getting a winning trade is significantly higher. And you'll notice that it's not 100%, but 95% of the time, you're going to get money flow as assessed via the use of the correlative markets occur when you get a multi-time frame alignment and trend. And it makes sense because if the institutions are selling the pound dollar hard, they're going to create a multi-time frame alignment of trend to the downside. And they're also going to create the perfect alignment of our correlative markets. All the markets that fall with the pound dollar are falling. The markets that rise with the pound dollar are rising, because that's where the money's going. Now, it's not 100%. As you can see right here, we had a brief alignment and no background, but there's no trade here. You need both. So you want background and you want the correlative markets, which are tracking the direction of money flow. Now, lots and lots of software packages tell you that they can ascertain the direction of money flow. Now, it's an unknowable, directly trackable number. The institutions don't call you on the phone, and they don't tell you. You have to be able to sort of track its footprint. Now, there are a number of ways that we do it, and this is one of them. But really, the key, and really, the multi-time frame alignment and trend is another way of tracking money flow. You're not going to get this unless there's institutional participation. What you're going to get more likely is these weak, is either no background or much weaker background. This dark pink is really only going to occur when you've got a lot of money really being pounded out of this market. Now, for us, we want to create a little bit of a neural net, because I know everybody understands that, and this is a really key point, especially in the Forex, that no Forex, I can't type, market moves independently. I can't spell. Independently. Don't worry about the spelling. They're all linked. And if you try to trade one Forex pair in isolation, you can do it, but you won't be able to do it with as much precision as if you're able to watch multiple Forex markets at the same time without having to put up a whole bunch of charts. That's what we're doing here with with our quant line. Now, the reason it's called the quant line is because each market, the three markets in here, are quantitatively weighted based on the correlation coefficient. If the correlation coefficient is 0.9, it's weighted more heavily. If it's 0.7, it's weighted less heavily. It's got to be 0.7 or greater. So 70% of the time, it has to move in the direction we need it to move. Now, in order to make it even more precise, we created this dot system. Now, this dot system is looking at the same correlative markets that this indicator is doing. And I know this is going to get a little complex, but it's making a different assessment. This is simply looking at a moving average. That's all. It's not looking at the position of the market, whether it's above the 50, below the 50, i.e., it's not assessing market structure, whereas these dots are actually assessing the market structure of the correlative markets. So let me explain that to you. This is just a moving average. When the moving averages are heading down, they're red. When the moving averages are heading up, they're green. The position of price within that market is not assessed. But the dots, and we just call this our dot system, does that. And I can explain it to you really, I think, pretty easily. Here's the 50, and here's the 15. Now, this is doing what I call a three-quadrant analysis. Now, you see each dot, whether it's an X or an actual dot, has three colors. It's either, I can show you by opening the indicator, and you can change the colors. There's dark red, red and light coral. There's pale green, there's yellow green, and there's dark green. So there's a hierarchy, and there are tiers in colors. And I'm just trying to find one area where see, here are the three colors. Here's the lightest. Here's the second lightest. This is the lightest color, second lightest color, and here's the darkest color. Now, when you have the darkest color on the correlative markets, you know what I'm going to do? Here's what I'm going to do. I'm going to do it on paint. It's a lot easier. When you have the darkest dots, either dark pink or dark green, it means that on that set of correlative markets, I'm going to set this to green for an up move. Well, it doesn't really matter. Here's the 50. And here's the 15. And here's price. Now that's the strongest position you can have. The 15s cross the 50 to the upside. The 50 is heading up. The 15's heading up. Price has got to be above both. That's when you've got the darkest color dot. Now, the lightest color dot is when, whoops, where'd my paint go? I don't know if I blew it out, but I can't. Let me bring it right back up. I'm sorry. I think I might have clicked it out. So this is really, I mean, this wasn't important to understand because it's really kind of fundamental to our platform. I know it might be boring. I hope it's not. So here's the 50 and here's the 15. So let's look at the different colors as they mature. First, the 15 starts out below the 50. They're both heading up, but the 15 hasn't crossed the 50. This is going to give you the intermediate color green. Then when the 15 crosses the 50, now price has always got to be above the 50 and the 15, no matter where the 15 is. Now you've got the darkest color here. Then at some point, what's going to happen is the 15 is going to flatten like this, and it's going to change color to yellow. Now the price is still above them both. You can stick it right here. But you'll notice there's now a significant decrease in momentum and trend. This is the weakest of the three colors and the lightest color dot. And let me find a really light color right here. So we know here that the trend has weakened significantly. It's the same thing to the downside. Strongest color, if we change this, '50s down. So it's really doing a complex assessment of multiple markets. 15's down, hasn't crossed yet, intermediate color dot. Remember, you can format these dots to whatever color you like. Crosses to the downside, strongest down color. Price is always going to be below both. Then when the 15 flattens and you lose that momentum to the downside, then you get that lightest color. You still have to trade short. You can't go long because price is below two moving averages. It's got to move through dual resistance. That's what these three colors represent. I'm just going to drop the paint. I think I can still find it if I ever need it, but that's what these colors represent. So when you get right here and you get a wick back and you want to take a trade short and you look at the color of these dots and they're dark, that you know that on the correlative markets, not only are they moving in the direction you need, but they're positioned such that the 15's below the 50 and price is below both. And so you've got a great chance for a continuation short. Now, this is these are simply a faster, higher time frame. This is a slower, higher time frame. I mean, we want to trade with as much specificity as possible. So these are just different speeds of the exact same analysis. So when you get a dual dot trade, let me find a good one here, like this. Are you going to take this continuation long? You look up. Your slow dot is dark green. The highest one, you've lost a little bit of juice, but it's a long trade. If you get pulled out in the down candle, should you take the continuation? Look up at the dots. They're both as dark as they can get. Up you go. If you're out on the reversal, and I'm not going to discuss automatic trade management strategies, you may take a pullback that allows one reversal, and then you'll get the entire move up. Then on your next entry, you have the same thing. Both dots, dark. Correlative market's good. Now the moving averages are with you. They're all moving in the right direction, and the dots, based on that analysis of the 50 and the 15, are telling you here's where price is, right there. And both of these are sloping to the upside. Now, as soon as you enter, you lose the faster moving average, but the slower one stays, and you get another move to the upside. So this is just a complex analysis of correlative markets done in multiple ways to make sure that you leverage to the greatest extent you can the Forex markets that are most closely linked to the Forex market that you're trading. So when you're looking right here, you're looking at one, the multi-time frame analysis of the market you're trading with background bias. And you're looking at the multi-time frame analysis of the correlative markets in two different ways. Now on the Forex, it's very, very important. Now I think it's really important on the index equities too, like the NASDAQ, Russell, Dow, and E-mini, because they're all linked tightly. It's less important on some of the other futures and Forex instruments, futures instruments, but on the Forex, it's really important. So you can see that on this chart, you're assimilating one heck of a lot of data. You're looking at multiple time frames and multiple markets on multiple time frames. So it's not a simple system, which is why each dot also has to be the dot of this market. Because if this wasn't the pound dollar dots, it'd be looking at the wrong correlative markets. Now, and this is what we do with optimization. You can't take one piece of software and trade every Forex market on it. You have to individually optimize each Forex market using the same fundamental technique and the same fundamental strategy. So background bias, dots are individualized for every market. For every market that we have a quant, we have a set of dots. And if you don't use the right ones, same thing again. You're going to look at colors that are wrong. And it'll become kind of clear pretty quickly because you're going to be heading up and you're going to get dots that are red. And obviously you put up the wrong set of correlative markets. And you can see the kind of specificity you get and the kind of accuracy you get and precision when you do take a long trade. Now, let's keep moving on, because I know there'll be questions. I want to give plenty of time for questions. And let's look at the 3-line indicator. Now, there's a problem with the 3-line, and that is it does a unique form of fractal analysis, which is just multi-time frame analysis. And NinjaTrader 7 and 8, they blame us, we blame them. So I'm not going to blame anybody. Now, nothing ever repaints on this platform, ever. But when you close it and open it, it's going to change. That's different than repainting. Repainting is in a live market when you're trading it, and you get a loser, and the arrow that puts you into the trade vanishes. Nothing like that ever happens. And if you leave this platform open and up, it will never change. But during real-time trading, if you look at this candle, what Ninja does is it compares what's happened in the previous candle. But when you close and open, the platform then compares what's going on in this candle to what happened in the future candle, which wasn't there in real time. So it shifts everything a little bit to the right, changes the color of the dots just a little bit, but has its most marked influence on our 3-line indicator, which is the halo color. Now, the 3-line indicator I make invisible, because all I care about is the candle halo. Now, here's the 3-line indicator. And because some traders are new, I'm going to make it visible for a second, which is a little bit of a pain, but I'll do it. And you can make the lines any color you want. Doesn't matter, because the software is going to set the color for you. And it's going to throw everything off. But I'll show it to you. I don't want to show it to you here. Where's the 3-line here? Put it down here. Oh, wait, hold on a second here. Here's the 3-line. Let me just put it in 4. Let me put it in panel 4. New panel. So I'll put it at the bottom. So it's down here. Now, I don't look at it because the first line does a multi-time frame assessment of momentum. The second one does a multi-time frame assessment of stochastic. And the third one does a multi-time frame assessment of order flow. And it's a very complex assessment of order flow using a moving average of the delta of the candles of the higher time frames. All the assessments are done off the higher time frames. Order flow off the higher time frame, stochastic off 2 higher time frames, and momentum off the 2 higher time frames. Now, the momentum assessment is best assessed off the candles, because you will get some yellow areas here that still give you the candle halo. And I'm not going to discuss the reason why, because I don't want to get too complicated, but this is telling you the direction of order flow, stochastic, and momentum on a multi-time frame basis. And since all we care about is the ultimate result of its analysis, there's no reason to look at it. So my recommendation, although some traders do like to see it, is to just make it transparent. And remember, there's a lot to look at, and you don't want your brain and your eye to focus off of anything more than your trading chart. Now I also now I can put the 3-line indicator back into the same as input series. So it's all the way up It's sitting inside price. So I don't need to look at it anymore. Now, we can only make kind of a guess as to the color of the halo in real time, because they do change. But what we want, and you can decide what color you want on the 3 line. For down, I have magenta, and for up, I have royal blue. You can also decide the thickness of the halo. I have it set at 3, and I have it set at 3. But you don't have to worry about this, because if you get the platform, Sergio configures everything for you, and you don't have to worry about any of this analysis at all. So when I've got a magenta halo, I know that I'm trading in the multi-time frame direction of order flow, stochastic, and momentum. When I get a blue halo, I know that I'm trading in the multi-time frame assessment of order flow, stochastic, and momentum. All 3 are equal in power in determining the direction of price. Now, I look upon this indicator. See, you're not going to get a much better continuation trade than here. I mean, it's a killer. You've got the candle halo. You've got the dual dots. The slower dot is the darkest pink. And I don't want to say it's a handy trade, but boy, that's a great trade. So just for the heck of it, we'll scale it. And this is a 30 pip trade. I mean, that's a very nice trade. And it really, really is a very low risk, high reward trade. Now, you can take a trade if everything is perfect. Maybe you'll take an entry without it. But remember, our platform is here to define risk. And if you take an entry without it, you're simply increasing the risk associated with the trade. I would recommend that you don't. I try it every now and then, and sometimes it blows up in my face. You want everything to be in your direction, and moreover, you want to make the market come to you. You don't want to chase the market for anything. Now, we're going to go over inputs and ATMs and all that in a second. Now, I know I'm going to forget something. The third is our brand new indicator, and it's really remarkable at how great it does. I want to use an oscillator that defines overbought, oversold on our trading chart. This is a brand new addition to the platform. We just added it. It does not change our trading methodology. It simply reinforces our trading methodology and defines those areas where the trade entries have the lowest risk. Like, we don't trade short above the 50 or long below the 50. We're trend traders and we're retracement traders. Now, here's what the oscillator does. Now, all of this is going to be done automatically for you. It's only 1 day away from being completed. It'll be completed Friday afternoon. And there's 2 areas to pay attention to. These will all be defined by one other line here, so that you may never have to look at the oscillator again. In fact, you can probably squeeze it so it's very small. When the oscillator locks down, no, that's the wrong thing here. Here. This means the bears have just got the market by the you-know-whats. This is going to create, we're going to have one more line underneath. Remember, that line is going to take is pretty much going to take the place of the oscillator. So we're not adding more complexity. What I want to do is decrease complexity. So you're going to get that red line to augment the quant line to tell you that the bears are absolutely in control. It starts here and it ends here. So now all you need is an entry. But you know, based on the oscillator, that this market is going to fall. You just need to get into it. Now, if you see the wick sticking out of this candle, it means price pulled all the way back. Now, if the halo wasn't black, and probably in real time it was not, there's your entry right there. And it's the same thing when the platform, and it's going to telegraph this to you with a line, is locked up. The bulls are in control, and from here to here, the market is going to go long. Now you're also going to get two entry signals. When the oscillator drops below this red line here and prints below, this is going to be an intra-candle assessment. Right now, this oscillator does not operate intra-candle. So right here, you're going to get a down arrow. Right here. You can't take the trade because you're not going to trade short above the 50. Here, you're going to get a long trade, but it's the same problem. You can't trade long below the 50. But it's going to give you incredibly good entries. And let me find you one. Like right here, you're going to get an up right here. One candle over. You're going to get an arrow. So the system is going to tell you that the oscillator is telling you to go long right here. Now you can't because the quant is yellow. So your next chance is when it locks green. And it happens right here. Well, not quite here. It's close. And in real time, this is likely to be a terrific long trade. So the oscillator is going to define terrific areas where the bulls are in control, where the bears are in control, and when one gives up and we get a cross, and when the bulls give up and we get a move down. It's extremely accurate. So the signals, the actual arrow entries are going to come along with the line that defines absolute bulls in control, absolute bears in control. It's very unique speed, and it's a really unique oscillator. And we're sort of rebuilding it because it has to deal with the geometric movement of price that you get with Renko. Now, it's going to be very, very easy to ascertain. And I know you're going to get some stellar entries here. I just have to find them. Here's one. I don't have too many days to look back. I should add. This is 10 days to look back. I should probably go to 20. Yeah, let me just go to 20 here. Remember, this is just one market. A lot of you are going to be trading 12 markets at the same time. And I'll show you how to do that. Right here, you've got this market locked long. Right along here. And there's your long entry. It's a perfect long entry. And these are not small moves. This move up right here, you're not going to get all of it. is 29 pips. That's a big move. Now, let me talk to you a little bit about the Renko settings. Now, the chart is set for a 2 Renko. And this is what a lot of traders don't understand. You can go, this is a day trading speed. You can take a swing trading speed. Just go to 50, 20, and 100. All I want you to understand is this. Renko size is increased like this. Here's your tick trend. And that every 2 ticks, you get a new candle. If it goes to 4, you've doubled it. Actually, you don't look upon this as a doubling. You just take the 2 and you add 2. You take the 5 and you add 5. You take the 10 and you add 10. So the next one is 10, 4, and 20. Now, if you think you double it again, you're wrong. Here's what it is. Remember, it was initially 5, 2, 10. So the next speed is just 5 more, 15, 6, and 30. So the ratio between these always is the same. To keep the candles symmetric, that's the way you keep the program optimized. The next one is 20, 8, and 40. And so on and so on and so on. Now, let's go back to 10, to 5. Now, we'll set this up for you. Don't worry about that. Now, here's one other thing that you have to know. And again, this will be reinforced multiple times. If you slow the speed of the chart, you have to modify the speed of the background bias. The input is an 8. No, I don't want to confuse you and you're going to think this is complicated. It's not. But if you want to trade an optimized chart, this is what you have to do. You just can't change the time frames. Remember, this is doing a multi-time frame assessment of multiple markets. If you're just looking at one time frame and looking at the same kind of indicators that traders have been using for 20 years and going bankrupt, then you don't have to do this. But this is important, and this configurability is recent. And it's real simple. If you go from a 2 to a 4, you just increase by 1 fib number, 13. If you go from a 4 to a 6, you go to the next fib number, 21. When you go from a 6 to an 8, you go to the next fib number, 34. You go from an 8 to a 10, you go to the next fib number, 55. And you have to do that for the bias, and you have to do it for the quants. The dots have take their cue from the inputs you put on the quants and on bias. So you don't have to do a third input. As long as you've got the quant right and you've got the bias right, the dot system will understand it and read it off of that. Same thing, 8, 13, 21, 34, 55. I can't remember what the next one is, 80 something. And that's going to keep you in everything moving at the appropriate speed. Now, just for the heck of it, I'll show you a higher time frame. Well, before I do that, let me just mention this. There are some instruments that have a 5th digit out to the right. Now, the pound dollar is 1.2780. So you're fine. But what if it's 1.2780 apostrophe additional digit? That means it's tracking price in, I think it's either tenths or 100ths of a pip. So what you have to do, instead of a 2, has to be a 50, a 20, and a 100. Now, believe me, this is information we will go over again. But for the traders who have the platform, and we're gonna look at other markets, you have to know how to modify this. So if you look at the instrument, you look at the right, and you see it goes one more digit out to the right than 4, it goes a 5th, then you're going to have to increase that Renko size by a factor of 10. The 5 becomes 50, the 2 becomes 20, and the 10 becomes 100. And then instead of trading in less than a pip, it'll go back to a pip. So if we look at a 50, I mean, we can't do it on this chart because this doesn't have that increment. So it's a lot of information. I know it's a little bit overwhelming, but this is what you need to do in order to keep this platform optimized. Now, Renko is without a doubt the best candle to trade. Now, I can't show you how the hybrid candles work because we need a live market. But inside each candle, you're going to get a wick. Now, this person keeps calling me over and over again. I'm going to have to block him. It's an 800 number. And you'll see that real time. I'm not going to discuss that very much. What I want to talk about right now is the trade scanner. Now, the trade scanner is the way you can trade 15, 12 Forex pairs at the same time. Now, what I used to do, there's my pain, is I used to take the chart and fold it up like this and bring it up like that. And the only time I would bother to look at it is when this orange alert went off. Because without the orange alert, it's impossible to get a trade that we want. This is looking at background bias, the quant line, the 15, the 50. It's looking at volume. It's also looking at the dot system, although we simply didn't have space to put it in. So when you get an alert, you know that you've got the potential for a trade. You simply pop the chart, open it up, look at the right edge, and here's what you may very likely see. Now, I can't get it exactly the way it is. Sometimes it's just like that. Let me move it over here and see if I can get it right here. Where you're likely to see this first green candle, first green background with dual dots, with green quant, oscillator locked long. You're in a perfect position for a trade. You just don't have an entry here. But remember, we're retracement traders on the pullback and the move up. Look at the market. The market is locked bullish. Up you go. So just in literally, you've got, 2 candles of latitude here to trade. So you got plenty of time. You're in, and literally within 60 seconds, you've got yourself a 20 pip move. Now, once you get that move, the alert's going to continue to pop because the whole environment is still conducive to a trade. We just know, well, in this case, we got another one. And what can I say? You've got another one right here. You got a nice retracement and another move up. So I don't know what your profit target is, but if you trade a few lots, 20 and 17, then you're not going to get all of it. I'm just showing you maximum excursion. On one signal, you get 2 great entries. So this is what you need to do. You need to set up the scanner on multiple instruments. And I'll show you the instruments that I used to trade. Now, I had a Forex trading room, and honestly, this is an awesome time. And I'm going to show you why. Hang on one second here. Instruments. We used to trade the Aussie dollar, euro pound, euro yen, euro dollar, pound Aussie, pound Canadian, pound yen, pound Kiwi, pound dollar, pound Canadian, pound yen. Those were the instruments I liked to trade. And I would trade them all off the scanner. Until the scanner alerted me, I wouldn't open the chart. When it did, I'd pop the chart. And oftentimes I would get a great trade. Very, very low risk with potential high reward trade. Now let me open the chart up again. That's what the trade scanner gives you the ability to do. Not have to go through all these boring stuff here where you're never going to get a trade. And that's why you can put up. I think that was 10 instruments that I was looking at. I said 12, but I think it's 10. Now I had my own Forex trading and we did really well. But I'm a single dad and I have to get up really early to get my son ready for school. And I couldn't take the time. I was getting up at 2 o'clock in the morning Eastern. And then I was trading the futures market at 9 o'clock in the morning. And I just got exhausted. But I traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 Forex pairs. Now, Dr. Keith, who's really a master, I mean, if you know his swing trade alert letter, you know how great he is going to start day trading the Forex a week from Monday. And I think it's the 21st. And everybody who comes aboard is going to get a month in his room. And I would be shocked, and I usually don't say things like this, but I would be shocked if he doesn't make you the cost of this program in 2 days. I mean, the guy is amazing trader. And he's going to be using our scanner. And I think he's going to get multiple winners. Now, you get a month, and that month won't start until the 21st when he starts. And he's going to be starting at 7:30 a.m. Eastern time. And he will trade for at least 2 hours. Now, I don't know what his profit targets are. I mean, our profit targets on the Forex are 6, 10, and 15 pips. And then we're out. So if you trade 3 lots, we just set it up that way. That's a lot of money. If you can get all 3 targets. It's a modest ATM on a trailer because I want to get my trades and I want to get a full winner. So this goes 20. I will close the trade at 15, and I don't have to take a pullback and get stopped out. It's not there's not a problem in getting in taking a reversal candle out. You can program that as well, but that's going to give back a lot of money to the market. If you program in your 3 targets, this one went 20. The average move on the pound dollar is about 20 pips. If you get a good move, like right here, let me see if this is a potential entry. See, this is locked short here. Now you're going to pull this over 1 candle because of its recalibration, but your entry is right here on the pullback, right here. And this is going to be about a 20 pip move, I bet, because that's about the size of the moves. It's 13. So it takes out 2 targets. So it's a nice trade for you. You make nice money. You don't have to take the pullback. So that's really the system. I'll show you a couple of other instruments. We can look at anything you really want. This is the pound dollar. Let's look at the euro pound. Now we're going to have to switch the quants and the dots. Then we have to take the quants out. It's a little bit of a pain. I know. Let me see if I set up a template for the euro pound. Template, load. Eventually you just have a template and you just drop your template in. And this is the euro GBP. And let's look, that's the 1 minute. We want the Renko. Down here. All right, I have not set these templates up, which I will do. So what I have to do is I have to configure it myself. So I'm going to take out bias. I'm sorry, not bias. I'm going to take out the dots. And I'm going to take out the quant. And I'm going to move in the dots for the euro pound. First the quant. Here is the euro pound quant. And the dots for the euro pound. I hope Sergio put them here for me. Hang on 1 second here.
Okay, Mark. It is the Renko FX template.
Okay, hang on 1 second here. Thank you, Rory. We do have that template set up. Hold on a minute. I'll have to find it. Hold on 1 second. I can't find it. Hold on, excuse me. Hold on 1 sec. Okay, here we are. Now, see, it's not set, Rory. Hold on 1 second. Let me turn it off. It's Florida Power Line. Yeah, the template's not set, Rory. It's not set for this program. So I got to go back. I'm sorry. And you know what I'm going to have to do? I can't get that chart back because I don't think I set it as a template. Oh my gosh. Yeah, it's not the right template, Rory. We haven't set the templates up. So let me add what I had. What a pain in the neck. Hold on a second. Here we go. Got it. Now, I just have to take out one indicator. We're just testing Ikimoto Cloud, which I'm going to remove. And we just changed our oscillator, which I'm going to take out. I'm going to put in our new one, which I have to do over here with the code. Hold on a second. Let me find it and put it in. And we've got another. We can look at a different market. Hang on 1 sec. I just have to find that. Now, all the templates will be set up and ready for you to go. Sorry about this. Like I said, it's not the simplest platform, but we'll set up 12 templates for you. And I'm just looking for one indicator that we just put in here. And I have to find it. I swear to God, I have 150 indicators here. I think here it is. Nope. I'm looking for the oscillator indicator, Rory, and I'm having trouble finding it. I don't know what Sergio named it because it's a beta tested indicator. So I have to find it on here, and it's not so easy to find. I got it. All right, we're good. Here it is. All right, I created a template. Hey, hooray! Now here is the euro pound, and let's take a look at it. Let me add more data. Let's add 40 days. And then I'm going to go to questions. And you can see it sets up exactly the same way. This one's a little choppier. Here's where you can take a short trade. You just need an entry. You have the oscillator locked short. I don't really see any great entry here yet. Here you go, right here. It would depend on the color of the 3 line, which I can't tell you for sure when we're not in real time. If it's blue, you've got to move up. You've got the quant, you've got the background, you've got the indicator locked long, you've got your entry right here, you've got your 50 up, your 15 up, you've got your dual dots. The slow dot is the darkest green, and we'd like to see it as the trade matures. Both go dark green, so we know we've got the strongest uptrend in the correlative markets, and we've got a really beautiful trade. And this goes 22 ticks. It would take us out at 15. I'm saying ticks, it's pips. I'm sorry. So it doesn't make any difference what you trade. You're going to get the same entries. And look right here. Again, I could do this forever, and I don't want to run over. When you have no background color to speak of, look at price. It's just zilch. Try to trade in here, and you're going to wind up getting hurt. Once you develop a trend, and this, I don't know if you have the oscillator okay here. You just don't. You're not going to get a great trade on every setup. But here's your short trade, and this is on an oscillator arrow crossing right here, and the oscillator is crossing the red line and printing right here. This is going to give you an arrow short, and there's your trade. Now it's actually across days, but that's the entry. So I mean, honestly, I could do this forever. You're going to get incredibly good signals. Each workspace is going to have its own template, which will have its own set of dots, its own set of quants. You're going to have to reset the background bias and quant speed based upon whether you want to day trade or whether you want to swing trade. I can just tell you this, it makes no difference whether you trade a 2-unit Renko or a 20-unit Renko. These setups are identical. This is a time-independent instrument. If you want to swing trade, I mean, on one of the instruments, in 2 seconds, I found a 196 pip trade on a 20-unit Renko chart. And you're not going to get many of them. But if you watch 12 instruments, you may get a few. in the course of a week. How many do you need? So the style that you want to trade is up to you. The automatic trade management strategy we're going to recommend, it's based on your risk tolerance, but the entries are clearly defined. This indicator was done, you would see them right on the chart. You would see that locked up or locked down, and it would be very, very easy to get an entry. Not hard at all. And you're going to see that some really good entries just don't have all the independent variables with you, and you can't trade. Right here, you're locked up. All you need is an entry, and you've got this trade. Dots, fast dot, darkest, right here. You're going to get these over and over and over again. Honestly, ad nauseum. Let me answer any questions. Hang on 1 second. Okay, guys. Okay, hey, good afternoon, Jeff. Hey, John. I don't think so, John. I think you gotta be patient. And I think if you don't get this green background bias, John, then don't trade. Because I think, I mean, I don't say that sarcastically. I say that with, an honesty. Don't risk your money in a really choppy market where you can't get that multi-time frame alignment. I mean, that's honest to God, my feeling. When the markets are nuts, don't chase them. And I think you should take a very, very conservative approach, which is why we've just created this oscillator, to give us the most conservative entries we can get. Okay, hang on a second. Robert, I think most of my trades, I'd say 90% have the 3 line. Once in a while, I'll take a trade without the candle halo, but boy, it better be a terrific trade. That's not an absolute essential, but it really helps an enormous amount and increases risk significantly if you don't keep it. There's a recording. Thank you. Jeff's been using the 4-unit Renko, and he's gotten great results. So those are all the questions, and I appreciate that. Let me just quickly show you the offer for the platform. If you're interested in coming aboard, and let me just get rid of that, and let me find my my slides here. They're right here. Now, this is the offer. It's normally $2,400. It's $13.99. It's a lifetime license and free updates. And with it, you get our educational training module, our video tutorial library. You get a month in the room with Dr. Keith, which will start January 21st. And I'm telling you, he is been trading the Forex for 15 years. He really is a stellar trader. And his swing trades are incredible. And I think he's going to make, I think he's going to be incredibly successful. And the first 5 orders will get the scanner for free. So you're going to be able to trade multiple markets. Now the offer expires Sunday night. And if you have any questions, you can call us 786-713-5276. And let me see if there are any other questions. Yes. Yes, Tamir. Yes, you're going to get everything. You're going to get all the templates, and all the associated information you need. Believe me, you're going to be swamped with stuff. Plus, you have any questions, you can always call me, always call Rory. We're here 10 hours a day, and Sergio's the tech guy. You have any questions about the setup or our configuration, Sergio will do it for you. Don't worry about the tech aspect of this. It's just not an issue because Sergio's right on for that. So you're good. And you know what? This is going to be an automated system soon. And if you're on board here, it's not going to be free, but you're going to get it at a big discount, as opposed to anyone who just buys the automated system. So we are automating it because the signals are so objective that an automated system can trade, I mean, literally 20 pairs, and we're going to be automating it. It's a big, mandate for us. The system will be ready to go out, John, Monday morning, out the door. There is, John. You just have to call us and we'll tell you. We'll give you all the info on that, okay? Or send us an email, info@rightlinetrading.com. Here's our email. Info at, be nice if I could type here, at rightlinetrading.com, either one. Or call us right here. We're all here. Rory's here. He handles all of that. So you know you're good on that. I know they're going to come, Robert. They're coming. We are going to launch the automated before the end of the month. I would rather push it out fairly far, Jeff, than overpromise and underdeliver. This is not hard to code because we already know the entries we want to take. That's the hardest thing in an automated system, is determining where to get in. We already know that, and we already know the automatic trade management strategy to trigger. So this is not going to be that hard. I just got to get Sergio off of doing all the other stuff I got him doing. And once he focuses on that, we can push that out and we can get it out to you. The monthly data feed course, John, if you have a Forex broker, it should be free or very, very tiny. So, I mean, it really shouldn't be much at all. I have a free data feed from FXCM, but you should not have much. The cost should be very, very minimal from a Forex broker. I mean, they should almost provide you the data feed. I think it's going to be very small, because unlike the stocks and the futures, whereas there's the NYMEX, there's the COMEX, there's this and there's that. There's just one data feed that does every single Forex pair. So it's very simple and it should not be expensive. Thank you, John. No problem, John. I got two Johns back to back. Thank you, Tamir. Jeff is saying, I wish I could tell all these people how amazing this system is, Mark. Jeff, I really appreciate the compliment. I really do. You know we're busting to make it as good as we can. Jeff says he's getting amazing results. And I really appreciate that, Jeff. Thank you so much, Phil. You got it, Jeff. You got it, Phil. God bless you too, really. Yeah, Sergio, we torture. We're going to have to put him on medication soon. You know, David, honestly, right now, no. And you know what the problem is? It's my son. I'm a single dad, and I mean, it's a solo deal here with me. And I work like 10 hours a day. If I don't take a little bit of time in the evening to be with my son, he'll forget what I look like. He'll say, who's that man? And I'll have to say, hey, Andrew, that's your dad. So really what we're looking for is hopefully Gary will come aboard. He's facing a medical issue. If that's overcome, he'll be trading at 3 a.m. Eastern. Then we'll have Keith for sure in 1 week trading the Forex at 7 a.m. And then I'll be trading the futures at 9:30 a.m. Man, if that isn't enough trading for you, David, I'm telling you, if I traded at 8 p.m. to 10 p.m. in the evening, I'd be on Prozac of massive doses. Thank you so much, Jeff. Thank you, Robert. I mean, I'm just being honest with you. If that was something in the works, I would tell you. If we get somebody else who's as good as Gary and David, we'll give it to them. Because I think a lot of people would trade that session, an evening session. But it's just not something that I can do. So listen, everyone, no matter what you do, I wish you the best of luck. We're the small fry, the little guy here. The institutional traders make all the money. I really think this is going to make you profitable. And I really do believe that a month in that room with Keith is going to be a blowout month. Again, I wish you the best. Thanks so much for giving me your time. And I really, really, really do appreciate it. So have a wonderful, wonderful evening. And I look forward to seeing you guys. Take care, everyone, and have a great, great night. Bye-bye. This is recorded, and we'll be sending out the recording. Bye-bye.